Welcome to the Daily Insights That Matter. Now, FPIs, often known as hot money, have a knack of vanishing at the first sign of trouble in an economy. Now, this trait is particularly evident in the Indian markets, where the FPI flows tend to become highly volatile during times of crisis like the recent Russia-Ukraine crisis, rising inflation, interest rates, etc. However, FPIs have provided some much-needed relief to the Indian markets over the last few months. Now, in a remarkable turn of events, foreign portfolio investors have intensified their investments in the Indian equities. Now, the month of May has witnessed a staggering influx of 30,946 crores from FPIs into the Indian equity markets, reaching a 5-month peak and sustaining the positive momentum that began in the month of March this year. Now, the impact of this surge has been profound and it has allowed the benchmark indices Sensex and Nifty 50 to completely erase their losses for the year 2023. Now, one key reason for the momentum in FPI's flow is the growing anticipation of the conclusion of the quantitative tightening cycle in the United States. Now, this expectation has made FPIs come back to the Indian equities seeking investment opportunities. Another crucial factor behind the influx of FPIs into the Indian equities is the decision by the Reserve Bank of India to hit the pause button on the rate hikes. Now, this move by the RBI has acted as a primary trigger for the increased inflow of funds into the Indian stock market. Furthermore, the prospects for the Indian economy are looking brighter, with IMF projecting India's GDP growth at 6.8% in 2023-2024, surpassing the global average. Coupled with the inflation mellowing, the overall economic landscape appears favorable. These positive indicators have made India an attractive choice for foreign portfolio investors. Now, the Adani saga has been the talk of the town since the Hindenburg report in January. Now, this has taken much space on the Indian economic as well as the political landscape. On 2nd March, the Supreme Court constituted an expert committee to provide an overall assessment of the situation. Now, there were 3 main areas of investigation questioning the violation. First was the maintaining public shareholding of at least 25%. The second was the failure to disclose transactions with related parties and other relevant information which concerns related parties to SEBI in accordance with the law. The third was the manipulation of stock prices in contravention of the existing laws. Now, the issue of minimum public shareholding is dependent on whether 13 overseas entities have links to the promoters of the Adani group, and thereby suspecting that the shareholding in the listed Adani stocks in the hands of these 13 overseas entities would not qualify as public shareholding. Now, while the committee said that there is no evidence or demonstration indicating that the individuals declared as beneficial owners, the committee said that it cannot express a view on the related party transactions in connection with the 13 overseas entities, as the market regulator, which is SEBI, is still investigating the transactions. In another development, in the Adani Hindenburg controversy, the expert committee said that it cannot as of now arrive at a finding of regulatory failure of SEBI in dealing with the alleged contravention of securities law by the Adani group or any of the other companies. However, investigations of stock manipulation also are still underway. Now, investors are cheering the findings of Supreme Court appointed expert panel that did not find evidence of any regulatory failure, and hence the optimism around the Adani group. Additionally, several media reports have claimed that Adani has been given the clean chit from the Supreme Court, which is absolutely not true, as the investigations are still ongoing and most questions are still unanswered. SEBI has stated that it is complex and requires more time to examine all the aspects of the situation. The Supreme Court has given SEBI time till the 14th of August to complete its probe and accumulate its findings. Now, a deeper probe will help clear the bigger questions, which is expected to be done by 14th August. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com